Hi there, good morning. Thanks for tuning in to this month's market update. A few things on today's video. Wanted to look at some market stats and just kind of see how things are trending as far as mortgage rates and housing inventory. And then also wanted to just go over a question here I've been getting pretty much the whole year and beyond, and maybe it's a question you've been having, and we'll get into that later on though after some of these market trends. Let's dive right in here. Firstly, let's take a look at mortgage rates. And if we look at the 30-year fixed conventional rates per mortgagenewsdaily.com, we are right at 7% today. It's the third week of June as I'm recording this. And if we compare that with just a month ago, it's actually down about 10 basis points from a month ago. So not a whole lot of movement there. We look at a year ago, this period, it's actually up about 15 basis points. So again, over a year-over-year period, not a really significant change there. And if we look at the high during the last 52-week period, we can see the high is 8%. So clearly we've come down from our highs, but we're still quite high as far as mortgage rates go. So right at 7% today for 30-year fixed conventional rate. Now, as far as housing supply goes, i.e. inventory, we are actually seeing, we're getting into the summer months here, and traditionally we see the most amount of activity, transaction-wise, occur from summer or from summer months. And if we look at inventory levels on a month-over-month basis, we have seen a slight uptick in inventory of about 10% month over month. So we'll see if that trend continues. Inventory still remains low. So any addition we can get to inventory supplies is much needed. And lastly, wanted to go over this question I've been getting here, and this is, when will the market return to normal? And maybe you've been wondering the same thing. And ultimately, a couple of things have to happen for the market to return to a normal market. One is we need more supply to come online. And realistically, we're not going to see the supply that is needed based on the current demand come online for at least several more years. I would say 5+ years. And then additionally, we would need to see mortgage rates come down significantly from where they're at today in order to incentivize, or at least just make it make sense for folks to move that do have very low mortgage rates secured already. Because right now, people don't want to get out of their low interest rates that they obtained during the pandemic and over most of the last decade. So I think we're in a new norm of a market. To see a pre-COVID market again, we definitely need more supply. We need that supply and demand imbalance to start balancing out. But the biggest issue is having more homes come into the market, and it's going to take years for that type of inventory to actually be built and then come online. So I hope this helps. Hope this is informative. If you got any questions, need anything, feel free to get in touch. We'll see you soon.